Hello and welcome to the Rareliquid podcast. Today, I'm speaking with Akanksha, who went to Wharton for her undergrad and also for her MBA, so she's a fellow classmate of mine. Akanksha held internships at Oliver Wyman and UBS before working full-time at Evercore in New York, and then she transitioned into growth equity at TPG, covering healthcare investments. Growth equity is its own industry that's basically in between venture capital and just more of your traditional large-scale just buyouts in private equity, although Akanksha has had a wide range of experience in a lot of different types of investments. And so I hope you enjoyed this interview because I don't think there's a lot of content out there about growth equity, and I think it's a super interesting industry a lot of people should consider. Now, before getting started, if you're interested in breaking into private equity, you're definitely going to want to check out the Private Equity Investing Certificate Program being offered by Wharton and Wall Street Prep. This program is sponsored by top firms like Blackstone, Carlyle, and KKR. And over 8 weeks, you can learn at your own pace through this online course that's taught by Wharton professors, Wall Street Prep's PE program director, and real estate PE investors, including David Rubenstein, the founder of Carlyle, and Martin Brand, the head of North America PE at Blackstone, who will cover topics like the PE deal process, valuation, how to think like a private equity professional, and more. By completing the program, you also unlock access to the alumni member database, fireside chats with PE investors, and exclusive networking events with the world's top private equity recruiters. This program runs 3 times a year, and be sure to use my code rareliquid to get $300 off and sign up by the early registration deadline to get an additional $200 off. And I'll leave a link to all of this in this episode's description. So Akanksha, thank you so much for making the time. And can you just start off by giving us an overview of your background?
Yeah. So I'm originally from India and was pretty fortunate to have had an international upbringing. So I moved around across a few different countries and actually came to the States for college. I did my undergrad at Wharton as well. So it was a good experience. I think undergrad at Wharton compared to the MBA is a pretty different experience. I studied finance and statistics. So took a very quantitative route to complement the liberal arts background. And kind of across over the course of my time at Wharton, found investment banking as a career path for me. So right after college, joined Evercore in their New York office within their M&A group. And then after that, moved over to the Bay Area to join TPG. And then after a couple of years there, came back to Wharton to get my MBA.
So you said you had a pretty international background kind of growing up. Can you kind of share a little bit more about that?
Yeah. So I think a lot of people ask why I traveled. There was no reason or rhyme or reason to kind of all the places that we went to. It was just my parents wanted to get that experience. And I think they did a pretty good job of kind of lining up schooling and circumstance to be able to make sure we had built-in breaks to move around. So when I was really young, we moved out of India to spend some time in the Middle East. I was in Kuwait for a few years, in the UAE for a few more. And then after that, I spent a lot of my formative years in Russia, actually. So went there through, I would say, around half of high school and then transitioned over to boarding school in the UK and then moved here.
Wow. Okay. And I was actually wondering, because I know you also worked at Oliver Wyman for a summer in Russia. Was that because you wanted to kind of go back to the country?
Yeah, twofold. One is it's always nice to be closer to home. I think at that point I'd been living away from home for 3 years, 2 during boarding school, 1 during college. And spending the summer at home seemed like a good chance to kind of reconnect and be closer to family. And then I had heard a lot about consulting as a career path to explore. And so wanted to use that summer to get an understanding of what the field was like. And this was a good way to do both at once.
So in Russia, though, I mean, do you speak Russian, and were you speaking Russian during that summer, or were you?
It was a
English?
hybrid. My team was pretty accommodating with English, but yes, the entire team spoke Russian. I had professional proficiency of Russian at the time because we'd lived there for so long. Now I think I've lost it because it's been a while since we moved out. And once you're not keeping up a language, you lose it pretty quickly. So it was an interesting exercise, I think, to like work in a different language and also learn about technical matters in Russian. But I think it was helpful to also then be able to switch into English when there was something I really wanted to get across to the team. So it was a good combination.
Gotcha. And a lot of people, a lot of times when they're interested in business and in undergrad, they compare consulting and banking. You said that as you were kind of going through your undergrad years, you found finance in some way. What made you decide to make that switch?
Yeah, I think it was very similar to the process you described, where those were the two industries that people talk about the most in undergrad. So pretty much right as I walked through the door, I heard about people saying there's opportunities in consulting and banking as I looked at upperclassmen and what they were doing and how they found their paths into those industries. So those were on my radar as both being opportunities where you can really develop a very versatile skill set at a pretty junior level in your career. And so I figured that you have exposure to a bunch of different industries, you're getting that technical skill building, but then you're also just getting exposure to a lot of variety on a day-to-day basis. So I wanted to see more of that, what that was about. So after my experience in consulting, I kind of took the time to reflect. Of course, it was a freshman internship. So I think there's opportunities to kind of continue building even on that. But at that stage in my time, I liked the nature of what consulting work was, how analytical it was, how you thought about a problem from various different angles. What I wanted more of was that connection to actually being able to see the implementation through. And it felt like once you had done all your analysis, synthesized your recommendations, you handed it to the client, and that's where your role stopped. And you didn't really have as much visibility into how it was implemented or if it was implemented. So I wanted to be a little bit closer to that next stage of the process. And I thought that banking, given kind of a growing interest I had in finance, I mentioned I was a finance major at Wharton, so was starting to take a lot of really interesting classes around valuation and corporate finance. And I felt that being in a similar advisory role, but with that quantitative finance focus of looking at it from the lens of a company's financial position seemed really interesting. And that's what led me to then start looking into recruiting for investment banking.
And I do want to go more into your time at Evercore. But before that, I think a lot of people are very interested in the Ivy League experience as well in undergrad. And so I wanted to ask a little bit about your time at Penn. And one thing I do want to ask about is a lot of times, because I do some undergrad mentorship and things like that for Penn students and Wharton students who are in undergrad. And some of them say that it's a very intense environment, very competitive. And sometimes people could kind of do things that seem like they're kind of clawing over each other. Versus others are like, oh, it's very collaborative. And first of all, it's easy to make friends. Like it depends on like who I talk to, I guess. So what was the experience like for you?
Yeah, I think it's probably a mix of both. I'd say that it was interesting getting used to higher education in the US. Coming from the UK, I had been very focused on specific subjects that you study in university, and to come here and to have a much broader aperture of all the things you could explore and do, I really enjoyed that. And I think Penn is a great place to cultivate that, even outside of Wharton. The access we had to all of the other schools was great, and I took a lot of really interesting classes. And to be able to explore that side of my academic interests. I think the Wharton experience itself was great because it was very focused and pre-professional. So it got you thinking about what you want to do with your life, what skills are helpful for you to be able to get there, and how you can best position yourself professionally from a very young age. And I really appreciated that focus. But the flip side of that is it was extremely competitive. The classes were intense. Unlike maybe the MBA, academics mattered a lot. And people were very focused on it. And it could at times be very stressful balancing the academics with the recruiting and feeling like you had to have 3 steps planned out before you even realized what you wanted to do. So I think it was a healthy balance to have kind of friends that you could feel like you could lean on and have that community that you could go to. So I think that Penn's mentality of kind of work hard, play hard, which is what I think it's known as outside of our community and even within, it resonated with me, and it was really what the experience was like. But yes, at times people got a little bit competitive and kind of going after the same things.
And I do remember also during my time in undergrad, you touched upon how so many people feel like I've already planned their next 3 steps ahead. And that can feel very stressful if you don't feel like you necessarily know what you want to do and you're trying to plan ahead, but you don't even know if like it's what you necessarily want to do. And so that's like a great example of like a detail of what the undergrad experience kind of might have been like for you. Can you share maybe one personal like really, really great moment at Penn and then one like really, really tough moment, like one story for each during your undergrad experience that really kind of elucidates what the experience was like for you, if any come to mind?
Yeah, I think rather than specific instances, I think of general periods of my life where I was either very happy or very anxious.
Mm,
I think on the one hand, part of the biggest source of my anxiety at Penn was just feeling like, as we mentioned, not knowing what I was doing with my life. And to see others go through the recruiting process and have things lined up in industries that I wasn't necessarily interested in, and feeling that FOMO of, okay, I should also be going for opportunities that are coming up around now, or trying to get options to kind of decide, was induced a lot of self doubt. So I think that was a period in my life where I was like very uncertain about the next step. And as a result, I think I didn't kind of take a step back and enjoy everything that I had around me, the friends, the community, and everything that Penn has to offer, because I was so laser focused on someone else's idea of what I wanted to do. So I think that it took a little bit of time for me to step away from that. And conversely, some of the happiest moments of my time at Penn actually came after that. Once I realized that, and took a moment to then invest a little bit more in the relationships that I was building, and to really immerse myself within the community in big ways and small. So kind of starting to go to more of the social events, and having late nights with friends where you just do nothing but talk. I think before I hadn't given myself a chance to really do that, but once I realized that, these are supposedly the best 4 years of our lives, and I want to make sure I have a well-rounded experience, things got a lot more balanced, and I started enjoying my time a lot more.
yeah, that makes sense. And I think that is a arc that a lot of us kind of go through, if not in our undergrad years and also in our 20s in general. And I wanted to ask about how it felt to get your offer for Evercore. Was that, I don't know, back then during that recruiting process, was that around like your sophomore spring or for your junior summer internship, or did you like full-time recruit, or was it your junior fall?
Yeah, it's really taking me back, trying to think through the timelines. It's getting earlier and earlier. So I know people now are on a slightly different, maybe even further accelerated timeline. But for me, I'd actually interned in investment banking my sophomore year. I'd been at UBS and had an understanding of what the role was like, and was thinking about what kind of the right fit might be. And so I recruited for the opportunity at Evercore, I'd say while I was at UBS. So that sophomore summer, was when I realized that I would be able to intern at Evercore junior summer. And then I used that experience to then inform my decision to go back full time.
Gotcha. Okay. So you do mention that you were kind of looking at other people who are 3 steps ahead, but you're kind of 3 steps ahead. You were working at UBS for during your sophomore summer, and then Evercore your junior year. So it seemed like you kind of knew that you wanted to work in finance almost right after you did consulting. But was it your classes? Like, what was it about when you were looking into finance that really interested you? For me, for instance, I had started investing in the stock market, and then I was like, wow, I have no idea what I'm doing. And I started looking into it more, and that's how I got interested in finance. But what was like the spark for you?
Yeah, I think it was actually in high school. So I had gone to a boarding school in the UK, done the IB program, taken economics higher level as part of that, and gotten into some of those concepts of kind of how does the economy work? What is the role of financial institutions? Understanding all of those dynamics. And I started to get more into, okay, what does it mean to practically then invest? Also had stock portfolio, participate in competition. So a lot of that was similar for me. But I think when I was at Penn, so there was always this thread of interest of kind of continuing to learn more. But at Penn, it was definitely the classes. And then also the framing of kind of my summers and as an opportunity to try something out and learn. So I really saw it as having 3 chances to try something different and kind of take cues each time to continue refining my interests. So consulting then led me to try to explore what investment banking was about. And presumably, if it hadn't been the right fit for me, I'd have junior summer to then look at something completely different. So I think that was also an iterative process of kind of continuing to learn a little bit more about myself each time. And Wharton has a really good finance program. So the combination of all of those factors together made it pretty natural to kind of find my way to investment banking. And then I'd say that there's a lot of support around recruiting into an industry that as structured as investment banking. And that certainly helped. If you look at certainly how you prep and how you build up that technical knowledge. But also when you think about diversity programs that a lot of these banks have for people like me who are underrepresented in the industry, I think that was a big part in helping me get a foot in the door and kind of understand a little bit more about what the job was about, even before you formally interview, but then also specific programs when it comes around to the internship.
Yeah, and I think touching upon the diversity programs would be very helpful for people actually, because I know there are a lot of different programs. Like at JP Morgan, we had Winning Women, we had it for different ethnicities and stuff like that. If you could touch upon like how this could be a great way for people who are underrepresented to enter into banking, that'd be very helpful.
Yeah, I think the goal of these programs is really to solve that knowledge gap where just some people have more access to information about what the industry is about than others. So it's really a chance for you to get to learn about get a lay of the land. So learn about the various different banks, various different roles within an investment bank, because it's not just M&A. There's a lot of other opportunities, and it's very helpful to then figure out where you would be best suited and where you'd like to be if you decide to recruit into the industry. And it's helpful to get an early access. I think given how early the industry seems to be recruiting every single year, it's helpful to build those connections early on and kind of start to get a sense for what the right fit might be for you, but then also to then present yourself in a way that comes across stronger compared to kind of the rest of the candidate pool. So I found them very helpful from that perspective.
Right. And how would you recommend people search for these? Is it like Evercore, I don't know, Women's Diversity Program in Google? Like how do you recommend people find these opportunities?
Yeah, I think that certainly helps. Most banks now have programs for a lot of the underrepresented minorities, whether it's ethnicity, as you mentioned, or gender or sexual orientation. So it helps to be able to look up what their diversity programs are. And sometimes they're just known as diversity programs. And I think they're also doing a better job now of going directly to campuses and meeting people across a wider range of schools. So you might be able to check your campus website or your local the university's kind of finance organization to see if they have any information on the programs that are coming up. Usually they tend to happen in the spring semester, and then use that as kind of entry point to then formally interview with the bank.
Right. And when you decided, so you had worked at UBS and then you went to Evercore and you decided to go back full-time to Evercore. What was it about the firm that really attracted you? And after a summer there, you didn't because I guess you could have also, full-time recruited during your senior year if you really wanted to. Obviously, Evercore is a great offer, so there's really no need to. But what was it about the firm that really drew you in?
Yeah, I think it comes down a lot to the people and the culture, and those kind of go hand in hand. So the people set the culture. But for me, I found that they were very bright people who were very devoted to kind of doing the best that they could in service of the client, if you think about kind of the role that we play as advisors. But they were also very thoughtful. So they understood that the job is very demanding and taxing and tried to only ask for what was necessary rather than just kind of putting everything on you to be able to handle. And so I think I appreciated that thoughtfulness from the team, and I was able to build really good relationships over the course of my summer. So it made it pretty easy to then decide to go back full time. And also it helps to have had 10 weeks to get to know people as you kind of enter a full-time job coming in. So you have a little bit of an idea of what to expect.
Yeah. I mean, I know I actually work with two undergrads who are like interns for rareliquid. They actually are going to Evercore. I have a lot of friends from our MBA program going to Evercore. All of them say like really good things about the firm. And even the people who interned as MBA associates who I've heard that they all are going back this summer. So it seems like the culture there is just really, really great. I mean, it's tough to be in banking no matter which bank you're at, but for an investment bank, it seems like Evercore has a really strong and good culture, and I've heard good things. And
there's also a dynamic between boutique banks and bulge brackets. And I think Evercore is one where it started as a boutique independent bank, which means that they don't have a balance sheet that they use to lend. They're just purely providing advisory services. And that presumably, or the pitch is that, that allows them to be not conflicted, very objective, and have the client's kind of best interest in mind when they're advising the right capital structure or the right terms for a deal. And so a lot of the boutiques that you see with that type of model are a little bit smaller in terms of headcount, in terms of scale and size. But Evercore has grown to a point where I think it's skirting that line where it's grown very large. I don't think it'll ever kind of adopt the bulge bracket model in terms of the business side itself, but in terms of scale and number of people, it's gotten very large with a lot of international offices. So it's also helpful to have that platform right out of college.
Right. Yeah. And for Evercore, when you were recruiting, do you feel like they asked a bunch of behavioral questions that really, is there a way that you guys vetted for good culture fit, or is it more through just like the side kind of coffee chats? Like, so I guess I don't actually, when you were recruiting, did you have like hire views and stuff, or were there any digital interviews or not at that time?
No, I don't think so. It was
so you had the
all
more
people.
Old school
Yes.
Recruiting process that I had as well then. So then for me, when I was recruiting, like I did a lot of coffee chats outside of the interview process, first round interview over the phone, and then I had a super day. And that's how we got to know people before they even started interviewing, and that we could tell if they're a good culture fit or not. At Evercore, is that similarly what you guys did?
I think so. I think it in moderation. I'd say they really value quality over quantity. So it's not necessary to have spoken to everyone in the team that you're hoping to interview with ahead of a formal interview process. I had maybe 1 or 2 conversations with people I knew at Penn, and no one kind of outside of that ahead of my process. And it's really about the quality of that conversation. So I think it certainly helps to figure out a little bit of that cultural fit beforehand, but on both sides when you're having those coffee chats. But I think it's also about presenting well technically and making sure that you're coming across as authentic in your interest to pursue a career in the field. And it can get very easy to read off script answers for both behavioral and technical questions. So I think one of the ways that we thought about recruiting, we were organized by campus oftentimes. So you had that connectivity to someone who knows what the college experience is like for you, and you're able to relate to them a little bit more on a personal level as you're exploring fit and trying to figure out if it's the right opportunity for you. And it's all about kind of coming across as authentic.
Yeah. Yeah. So do you have any tips for that? Because I think a lot of people struggle with that, of trying to sounding as natural as possible when you are in front of someone and all you've been doing for the past few months is preparing for interviews or coffee chats and stuff like that. Do you have any tips for how to sound at least authentic, or just be authentic?
Yeah, I think for me, it was helpful to talk to others about my interests. So use them as a sounding board for, do you think this is the right career for me? So I'd talk to friends about, I'm thinking of recruiting for investment banking. They'd be like, why? And so to walk through my answer with them as friends rather than outside of a formal interview context, I think really helped me drill down to the why of more of a human answer for why I wanted to do the job, and less of a, here are my credentials, here's why I'd be a good fit. And I think it's ultimately a balance of those. It's hard to fight the nerves when you're interviewing, but I think having really clear understanding of your why kind of going into the process helps, and seeing it as a conversation rather than an interview, at least for those behavioral questions. There's always, again, a balance of formality that you have to maintain, but I think that framing helped me with the process as well.
And we did touch upon it a bit earlier, and I did as well. For me, I talked about, for my why banking answer, I talked about having invested in the stock market. I also talk a little bit about how I lost a lot of money during that process, because I feel like it adds a little bit of humor. And then I talk about how I started looking into finance by reading some of the valuation books and trying to really understand what I was doing, and how that led me to recruiting for banking. What did you, and I ask because, I think a lot of times people benefit a lot from hearing other people's answers. And it was a while back. So you could give us a general gist maybe of how did you answer why investment banking during interviews?
Yeah, I think for me, it is And this answer, like you mentioned, is very personal for everyone. But for me, it comes down to the fact that I just find it very energizing to marry that quantitative with the kind of reasoning and the qualitative. So it's very powerful to be able to look at the financial statements of a company and get an entire picture of the industry it's operating in, but then also the specific operations of the company and how it relates across different functions. And so to have a role where you can, fresh out of college, be able to guide really impactful decisions that organizations are making with a grounding in that technical knowledge, I think was pretty unique. And I think investment banking would be a great career for someone who's looking to build out and test that skill set. And another part of it for me was also the variety. I mentioned this earlier, but I really did like the diversity of all of the different types of deal structures you can work on, but then also what you do on a day-to-day basis. So it makes you nimble, it makes you sharp, and it makes you focused. And those are all great qualities to have as you're figuring out where you'd like to build a career. And even if you think about investment banking as maybe a first step, maybe a lifelong career, I think it's well suited for both of those archetypes. And so I think that was one of the other reasons it appealed to me.
Gotcha. Yeah, I can definitely resonate with those. And on the flip side, then, who do you think would not be good fits? Or how do you know if you're not a good fit for investment banking?
I think if you don't have that excitement that I mentioned for the work, and part of it is, of course, modeling, but part of it is also some of the less glamorous aspects of the job, like maybe slide creation or a lot of process management when you're an advisor on a deal. It's taking call notes, it's sending out calendar meetings. All of that can get really difficult to do with the hours that bankers keep if it's not something that's inherently interesting to you. So I think having the opportunity to identify an industry that you're excited to learn more about, or thinking a little bit about, okay, do you actually want to be embedded in this particular part of an organization or to serve this role as an advisor, I think will be helpful in then reflecting on whether it's the right starting point for you.
Hey guys, hope you're enjoying this interview. And if you're interested in breaking into private equity, you're first probably going to have to break into investment banking, just like Akanksha did. And so on that note, I've been working on a how to get into investment banking course with my classmates who will be working at Evercore, JP Morgan M&A, and Goldman Sachs. And so I wanted to tell you guys a bit about the course I'm building. What's going to differentiate this course are two things. First, I'm going to be teaching you the finance concepts you need to know for recruiting by having you build simple, high-level models in Excel, which I think is the best way to teach technicals. Second, the course will be super comprehensive, covering not just technicals, but also an industry overview, recruiting overview, networking tips, resumes, cover letters, behaviorals, and a whole lot more. If any of this interests you, be sure to sign up early using my link in this episode's description to get 50% off when we launch, which likely will be around early winter of this year in 2024. You mentioned like the unglamorous parts about banking, which I'm very well aware of as well. A lot of times people in the comments actually from these interviews, they want to know kind of the nitty-gritty details of those unglamorous moments. And I was wondering if you could share one of your experiences in banking that you felt like, oh man, this is really tough.
Yeah, there's a lot of moments that test you. I'd say that even when you're working with very thoughtful people, like I mentioned, I was fortunate too. It's just the job is unpredictable. So I'd say what is really hard is having your entire day be free, for example, where you're like twiddling your thumbs or going out to coffee with people because you're just waiting for comments or waiting for a task. And then having that come in at 7 p.m. when you had plans to hang out with friends after. I think that can be really frustrating. And then all of a sudden it's 3 a.m. and you're still turning these comments because it was a very heavy turn. It can feel like I would have been much more efficient had I just gotten this at 9 a.m. when I walked in rather than at 7 p.m. So I think that part can be a little bit hard to handle. And as I mentioned, you do things where you're like, they need to be done, but you're not necessarily immediately getting or seeing the value out of them. So I think in those cases, it's very important to be surrounded by people who, again, tell you the why for why a certain task is important to the overall process. So it can feel very isolating if you're just asked to do something without understanding how it plays into the larger picture. And I think that's another aspect of the job where you can be a little bit proactive and ask about, why don't we do it a certain way? Why does it need to be done this way? Or take a little bit more agency in the work that you're doing. And I think that you'll find that it's pretty well received by people. It's sometimes they're just too busy and they don't think to explain that part. But if you show an interest, I think it can again help you connect with the work that you're doing a lot better.
Yeah, that's actually a really great career tip throughout all aspects, at whatever level you are, like asking your supervisor the why. Definitely in my first 6 months, I never asked why. But then I think, especially in my second year when I had more of an idea of what I'm doing, I definitely started to sometimes question why a VP or an ED or MD sometimes would be asking for certain things. In meetings, I didn't actually directly ask the MD, or for personally myself being like, hey, why are we doing this? But sometimes I'd ask my associate, we talk about it, and my associate would try to like push back a little bit and make the ask a little bit more reasonable. But definitely feel like that is a great career tip. And I'm wondering if you had another kind of personal or professional lesson that you feel like you really learned from your time in banking at Evercore.
Yeah, I think there's definitely the right time to ask, as you mentioned. So just being aware of that is helpful. And I think the other lesson that I would say I've learned is the value of listening. So you can learn a lot by, again, being reflective about the dialogue that you're in the room for. I think as a very junior person, you often won't get to kind of stand up and have an opinion that you can voice to a larger group or with executives of the client that you're advising, but being able to listen in on how the MD or partner is pitching something or the cadence of the dialogue. What are the questions that the client is asking and why do they care about that? Understanding the underlying motivations can be really helpful. So I think that's another thing I picked up on, and that carries forward even in investing. I think you learn a lot by listening to people who are smarter than you. So that was another kind of point for me in my career. And you always have to balance that with kind of sharing your own voice. But it certainly can be very informative to learn from people with different perspectives.
Yeah, at Evercore, as an analyst, did you like speak a lot during meetings, or did you not? Because I mean, at my time at JPM, I hardly spoke during meetings, or some client calls I did chat here and there, but it kind of a lot of times be like an intro, like, hey guys, this is the call, like let's get started, some stuff like that. But I'm wondering at a boutique, like do analysts have a little bit more, I guess, say during meetings?
Yes, actually, I'd say you develop that over time. You earn it based on the quality of your work and the level of trust that more senior members on the team, I should say, have in you. So it's right off the bat, you probably won't. I think once you're familiar with the nature of the job, familiar with the technical aspect of what you're doing, because you ultimately do own the quantitative analysis or the model on a process, whether it's in banking or in investing. So that's your domain, and you should be able to speak to it. So I found that, and I was on a smaller team towards the back half of my time at Evercore. So I got a little bit more autonomy and a little bit more responsibility with that. And I was able to present an analysis we'd done in terms of what were the considerations we were looking at and how we'd modeled them out. And then the partner kind of came in and took over with, so based on the conclusions derived from this analysis, we recommend so and so. So I think you slowly work up to being able to speak to the work that you've done. And I found that very helpful.
Gotcha. Yeah. And I don't know if this is a bulge bracket versus elite boutique thing, or if it's more of like a depending on your group thing. So yeah, everyone who's listening, take this with a grain of salt. Every group, I think, does it a little bit differently. I think just from my experience, the analysts didn't really speak up as much during meetings, but I could definitely see how at an elite boutique, maybe you're given a little bit more responsibility, and that could be a definitely huge plus of joining an elite boutique, besides just like also the higher compensation.
I think it is a little bit team dependent, even within kind of the boutique versus bulge bracket distinction. But I will say, if it is in external meetings, there's opportunities in internal meetings. So you can, again, going back to creating those learning opportunities for yourself, you can take the opportunity to present a turn to a partner being like, these are the changes we've made. Here's how we're thinking about things differently. Of course, it's a conversation you have with your associate and your VP to be able to ask for that responsibility. But I think those can also be really helpful moments of practice and experience that you gain.
Yeah, for sure. And you kind of talked about how you decided to ultimately, Well, very early on, you talked about how consulting, you didn't feel like you got you didn't really work on the next step after giving your recommendation. And then banking was a little bit closer. And then you eventually moved on to the investing side and recruited for PE. So I'm wondering if that played at all to why you decided to go into PE. Because even for banking, while the transactions you work on when they're announced, they do result in very important changes to the company, especially for M&A or IPO. These are like huge transitions for companies. You don't really actually do the operational work and have skin in the game in banking. So why did you decide to make that switch into private equity?
Yeah, I think you got it. I think it was my need to get a little bit closer to the value creation, to understanding companies and industries on a deeper level. I had a really good experience in banking, despite I think some of the hesitations that people have. I thought it was a good balance for myself, and I wanted to take that next step to get onto the investing side and think a little bit more deeply about value creation and what it means to create enduring value if you have conviction in an opportunity. So you do all this work, you understand that this business can make a meaningful difference in the industry that it's in, but then you also help shape the future direction of commerce and what it's going to end up doing in the industry that it's in. So I think that piece was, again, very exciting to be able to build on conviction that you have and be able to shape organizations while still being relatively young.
Gotcha. And did you do on-cycle recruiting or was it off-cycle for you?
I did on-cycle.
Okay. So when did you start preparing for on-cycle recruiting?
So this is another one of those things where it just happens earlier and earlier. You're never going to feel ready. For me, on-cycle took place, I'd say September of my first year of investment banking. So at that point, I had been on the job for maybe 2.5 months. And if you look at the time that I'd spent on the desk outside of training, it was even less than that.
Yeah.
So I prepared outside of work hours. It was pretty intense, I'd say, because we were also going through the matching process at Evercore, which is, I think it's changed since, but we basically had a couple months to work with different industry teams and try and find the right fit for us. So obviously you want to make sure you're thinking about what industry team you'd like to join in the job that you do have, but then you're also thinking about what comes next and what industry you might want to focus on when you're looking at an investing role. So it was tricky balancing both, but I think it is helpful to be able to make sure that you have the technicals kind of rounded out, because PE interviews can be pretty intense. And just kind of making sure you have that foundational knowledge. So I used the time I had on the weekends and just kind of a little bit before work to be able to make sure I was brushing up on my modeling skills and kind of technical knowledge.
That sounds like it must have been a very hectic time for you. And what was like the matching process like at Evercore? I mean, are you just kind of talking to people who are in different groups and then, I don't know, you fill out like a form or something and then you guys get matched up, or?
I think so. It might have changed now. It might have been streamlined a little bit, but for me, the way we went through it was, yes, a combination of networking and identifying the right fit culturally, but then also working with teams on active projects for a few months to be able to see if you enjoy that type of work and for them to also be able to assess multiple analysts. So it was, I'd say, a process that worked both ways. Through a combination of networking and your relationships, but then also your work product.
Gotcha. Okay. But going back to, I guess, your recruiting process for PE, can you go into a little bit of detail into like how many firms you were speaking with, and just for actually to also give a background for people who don't know. So on-cycle recruiting is after a few months into the job, you're basically talking with a bunch of headhunters who have connections to various different buy-side firms, usually in private equity, but also venture capital or hedge funds. And then you're doing a lot of chats with these headhunters, and then they kind of let you know, or I don't know, let me know if the firms actually reach out. I didn't do on-cycle recruiting myself, where within a pretty short period of time, like a lot of the top private equity shops will just start reaching out and setting up interviews, and then you may have like a bunch in a row and then hopefully leave with one offer. So can you kind of go into the details of what that period was like? Because from what I know, it's pretty intense and short.
Yes, it's. I'd say both of those are accurate characterizations. I think it lasts a couple days, maybe a week or so, where most firms will make the decision to participate or not. I'd say that more and more as it starts to get earlier relative to when you do actually end up joining the firm you're recruiting for. Some firms have decided not to just because they think candidates are not fully ready or they can't make a judgment on both sides at that far in advance. So I think you're seeing a little bit of a shift in terms of who chooses to participate in on-cycle and who doesn't. But when I was going through the process, and I think this is still largely true, the majority of larger funds will go on-cycle because I think there's a perception that if you don't, you miss out on talent that goes elsewhere during this very short period. But you characterized it well. So you initially have conversations with headhunters and recruiters who work with these private equity companies over the course of the summer to identify your interests and what you're looking for in the next opportunity. And then they are also vetting candidates at that point in terms of who they are likely to present to the firms that they represent. So when it comes time to kick things off, they will present a list of resumes and names to these firms that they represent and give suggestions for stronger candidates that they might want to see first or have an interview with. And so the firms get back to them with their feedback. Here are the candidates we'd like to see. They get back to you, inviting you to an interview. And I remember my year, it started at maybe 7 or 8 p.m. at night.
That's so ominous in the evening, getting those kind of emails. Yeah.
Yeah, I was in a client meeting, actually.
Oh, wow.
We had a client presentation happening for a pitch that we were doing at the office. And I remember looking at my email and we're like, oh, so-and-so has invited you to interview. Can you come down in the next 20 or 30 minutes to start the process? And usually the first process is going to be a model test. They want to make sure that you can do the basics of the job technically. And then from there, it gets to, I'd say, maybe up to a dozen or so rounds of interviews, both behavioral and technical, with various levels of investment professionals at the firm. So it can start junior and kind of work all the way up to the founder or managing partner of the firm.
Wow, a dozen interviews per firm? Like, did you say up to a dozen per firm? Okay,
yeah,
wow,
it can get it. You don't make it through all the rounds. I think they try and be expedient. If they know it's not a right fit, they will let you know so you can pursue other opportunities. But I remember I had to make decisions about how long I was spending in one process or to leave early and decide to participate in another. Because to your point, you can't come out of this having opportunities to have completed the process with multiple firms because they want to make sure that they fill up their class of associates in the course of those 48, 72 hours. So it moves very quickly. So if you want to participate in a process, you kind of have to decide to let go of the one that you're in.
Yeah. I mean, I remember one of my friends, he went through a process, got an offer, but he was in processes for like other top PE shops as well. And then they just gave him a contract in front of him and it was like, here's how much you're making. Like, here's an offer. You can sign it or not. And then he just signed it and like let go of all the other processes. And I'm wondering for you, when you were recruiting, like, how did you decide TPG SF? Because at Evercore, you were in New York. Is that right? So how did you decide to make a shift to SF?
Yes, and that's right. I think usually they don't give you the chance to walk out of the room and decide. So either you sign in the room or you let go of the opportunity. Again, I think it's starting to change where they're understanding that people need a little bit more time to make the decision, but it usually is that you need to be very clear on what you want heading into the process. For me, when I was thinking about the next opportunity, I was flexible in terms of my location. I wanted to find the right fit in terms of the strategy and the stage of investing that I was doing and the people I'd be working with. And it just so happened that I connected with the TPG growth team and most of the TPG team is based in the Bay Area because that's where we were headquartered. There is a presence in New York, of course, but when I recruited, I didn't necessarily know what industry vertical it would be in. I knew what platform I was interviewing for, which was the growth platform. And from there, I decided to join a vertical that was based in SF. So that took me to the Bay Area.
Got it. And for those who don't know, can you kind of help differentiate growth versus kind of just typical buyout?
Sure. So it oftentimes comes down to the stage of the maturity of the companies that you're looking at and the amount of capital that you can invest. So growth equity tends to be defined differently, again, based on what firm that you're at. You have various different models that go from late stage venture, more minority investments that you're making in really high growth companies to control positions that you're taking that look a little bit more like a buyout. But again, the common characteristic across those is you're looking at companies that are high growth. So you're looking at supporting them through an inflection point in their trajectory. You're oftentimes looking at 25, 30% growth. And you're thinking about how you can participate in some of the tailwinds in an industry that you're excited about, but then also a company that's differentially positioned to take advantage of those. So it comes down to a combination of investing in and conviction behind the momentum of the company and also the industries that you're excited to gain exposure to.
Got it. And you also touched upon or mentioned TPG's strategy and how it kind of was something that was interesting for you about the firm. So can you a lot of times these buy-side firms, they are hard to differentiate. So how did TPG really differentiate itself in the growth space?
Yeah, I'd say it is one of the more established growth strategies. If you look at mega funds, it was founded, I think, around 15 years or into the firm's history. So they've had a long record of being growth investors. And I think that was something that was pretty interesting to me, where you have such a large platform and then also a kind of more specific strategy where they saw an opportunity and wanted to take advantage of it. So it was the combination of like the resources of a large platform with a strategy that has had a lot of experience and a track record behind it. And then I'd say that the other thing that's different, and I kind of alluded to this earlier, is where within that spectrum of opportunities you focus on. Are you more a minority-focused investor? Are you more a majority-focused investor where you're kind of taking a control position in the companies that you're investing in? And that has different implications for how you interact with your portfolio companies following the investment. TPG has been pretty active in terms of having representation on the board of directors. I worked a lot with a lot of the CFOs of the companies that we had invested in to think through strategic dimensions, but then also financial aspects of the business. And I enjoyed that exposure, and that was something I was looking for. So that's another model or aspect of the model to think about. And I know some firms are a little bit maybe hands-off when it comes to their investments and have more of a wider portfolio of opportunities that they invest in with less individual interaction with any one portfolio company.
Got it. And for your time there, I mean, were you guys doing a lot of more of the minority investments, or were you doing actual, I guess you wouldn't do like full, correct me if I'm wrong, but would you do full scale like LBOs in that stage as well? Like, did you see the whole spectrum of things, or what kind of investments was your team focused on?
Yeah, I did actually. We did growthy buyouts, as
Okay.
they can be referred to. So did use leverage, did take a majority control position in businesses, and looked at that end of the spectrum, but then also minority. I'd say in terms of the growth portfolio, it depended a lot in terms of the individual sector. Some sectors had a greater concentration of minority, some had greater concentration of control. Overall, I'd say it was truly a mix of both types of deals. So it was really valuable as an associate to get exposure to both and understand a little bit more of the process dynamics, but then also valuation considerations that can be associated.
And what kind of valuation exercises were you guys doing on the minority investment side? Because for the full buyout, you just do an LBO. For the minority side, were you just mainly doing standard like DCFs and comps, or were there any like particular, interesting growth equity type valuation analyses that, most people don't know about?
Yeah, I'd say that it actually is pretty similar across both. So one thing I enjoyed about my experience at TPG is they're very disciplined and a thoughtful investor, I'd say, and they reverted a lot to first principles as you think about how to consider valuation for an opportunity. So we built an operating model. The only difference was that you wouldn't use leverage. within the deal structure kind of coming in. If you look at your sources and uses, it would be equity rather than equity and debt. And then, of course, there's considerations around pre-money valuation, post-money valuation. And with growth equity deals that are minority, you have to think about structuring as well. So you would often spend some time looking at the capital table and thinking about downside protection that you might need as an investor and building in, for example, a liquidation preference or an accruing dividend of some sort and modeling out what that means for you as an investor and depending on kind of your level of seniority in the capital stack. So different types of analyses, but that same underlying principle of what is your view of where this business goes and what does it mean for where the value is coming from. If you look at the various different drivers, thinking of revenue growth, multiple expansion, free cash flow generation, EBITDA margin expansion. So we thought about it a lot from those kind of fundamental drivers and used our diligence process to inform our view on what those should have been.
And over the past few years, I've also modeled out for my own company, and then a lot of those projections never just get hit. And so during your time at TPG, when you guys would initially model something out, and then you have all these projections, how did things normally play out? I mean, were there times where you're like, "Wow, we were actually very close to our projections," or was it kind of like lumpy and like some years you guys exceeded expectations, other times you didn't? Like, how did projection and then ultimately execution, how did those two compare?
So the one thing we say is like, as investors, the base case is always wrong. So whatever you model out, it's never going to happen exactly the way that you've thought about it. It's more of the principles of what are the key value drivers in the business. So we'd often look at it and always look at it in terms of a fan of outcomes. So what is the base case? What is the upside case? What is the downside case? What is the difference between them in terms of the assumptions that we're making? And what do we need to believe for each to be true? So I think that's the key focus. What do you need to believe? And that's where our diligence focused on. It was less about whether this number is 55 of top line revenue or 57 or 60. It's more about what does it mean for the market share of the business and the competitive landscape and its ability to upsell or cross-sell products in its portfolio. So it's questions like that. I think I gave you one example of how you change the framing to your understanding of how the business is positioned in the industry rather than justifying one particular assumption in a model. Of course, we spend a lot of time going through the reasonableness of our assumptions, and that's a key part of presenting any case to investment committee. But I think it is really that conviction that you gain through conversations with the company, the diligence that you're doing, as well as independent research and a view that you're coming to as investors of where can this opportunity go.
And while you're working on all of this, I know private equity or just like investing in general is such a different life and work compared to investment banking. I mean, it's funny. Investment banking has the word investment in it, but you're not really investing. And now you actually have more skin in the game and you're doing, as you say, like tons of diligence as opposed to kind of like running the diligence process for your firms or your clients, I should say. And so, as you were in the weeds of working in this new industry, what was like the hardest thing about the transition from banking to growth?
I think we were talking about this earlier in terms of when are the right opportunities to voice a perspective or opinion in banking. That was one of the biggest differences I noted, where your opinion is forefront, and when you're investing, you are closest to the analysis, to the diligence, and to the model. And so your team members expect you to speak up with a perspective on the opportunity. And that to me was something I had to work on being able to get comfortable with doing, is just speaking up more and speaking to the analysis that I was doing and the diligence that we were focused on. So forming a perspective on the opportunity, as crazy as that sounds, is a hard skill to build.
Yeah, for sure.
Usually you're very focused on executing the task that's been put in front of you, but to take a second and think independently about, what do I think about this business? What do I think are the key diligence questions to ask? Where should we be spending our time? If we're looking at seriously considering this investment opportunity, I think is going to be a shift of focus when you transition over to the investing side. And I think it's important to be mindful of that, as you can get very in the weeds when you focus on the model and all this really detailed diligence that you're doing and all these different data cuts that you're running. But having the ability to step back and then again, look at what it implies for the business that you're evaluating, I think is another skill that takes a little bit to build.
Yeah, I have a close friend who works in PE, and I would ask him about his experience, and he would mention something very similar. He would say a lot of times in PE, especially maybe if you're in the senior associate level, you can really get mired down into the details, in the weeds, and really forget about like what you're really doing, which is like, oh, should we invest in this company or not? And I think it'd be great if you could provide more detail as to like all the different aspects of diligence when you're looking into a company, because there are so many things that you have to kind of look into. So could you kind of go into the details of all the diligence, different parts of diligence you need to do in order to make an investment?
Yes. I think it varies a little bit based on the specific opportunity that you're looking at and the industry that you're in. But I'd say the broad categories of diligence that we tend to spend time on is one, the commercial diligence. So understanding the business as it's run today and what are the opportunities relative to the industry that it's in. So those are questions like who are the customers that they serve? What are the different products that they have? What is the competitive landscape like? What are the industry dynamics like in terms of buyer power, seller power, stickiness of the solution, switching costs? All those questions are part of what you think about from a commercial perspective.
And how do you get that information? Is it a lot of phone calls with customers, suppliers, and competitors and all of that? Plus, like reading a lot of industry reports, like how are you doing all this diligence for just the commercial part?
Combination of all of them. So we were thematic investors, and what that meant is we spent a lot of time building a perspective around what themes or opportunities within the healthcare space we were pretty excited about. So we had certain areas where we were like, there are tailwinds here and we understand the market dynamics and we're pretty excited about companies that are operating in this space. So that helps inform part of your view. But I think it's important to set that apart from the context of the specific business that you're looking at. How is that opportunity specifically positioned or not positioned to take advantage of those tailwinds? So a thesis is a tailwind is not a thesis, as one of our finance professors at Wharton says. So I think that's definitely one piece of it, and then the other is, as you mentioned, expert calls, we refer to them, but calls with competitors, with customers, with different stakeholders in the value chain of the organization to understand some of those dynamics. And then you also have good access to the company during the process. So sometimes helping or hearing management articulate their perspective and understanding of the industry in which they operate, can be very informative. Combine that with external consultants and their view, you start to get many different perspectives that you have to start to parse through.
Hey guys, so if you're interested in getting into an MBA program just like Akanksha, I recently announced a how to get into MBA course called Liquid MBA, which you can check out at liquidmba.com. The course provides access for all aspects of the MBA application process, access to a library of admitted essays, of which there are 10 per school, and super detailed school-specific advice covering things like student life, academics, clubs, resources, leadership opportunities, essays, and even 30 secrets for each MBA program. We have a 24-hour free trial, so you can check out the course for free, and also a no-risk money-back guarantee if you don't get into at least one MBA program. We also provide lifetime access to our Discord community where you can connect with peers and get additional support from me and my team. Admissions consultants often charge $400 to $700 per hour, which is crazy to me. And so for the price of a 1-hour call with a consultant, you get everything I discussed and a whole lot more. So I really am trying to make Liquid MBA a really good deal for you and a no-brainer. So if any of this is of interest to you and you want to break into a top MBA program, be sure to check us out at liquidmba.com and use my code SUMMER25 by the end of August in order to get 25% off of the course. Got it. So there's a commercial diligence for the other parts of diligence as well.
Yeah, so financial is another big bucket. So here is what you traditionally think of is what is the financial profile of the business, what is its ability to generate cash, and start to form a perspective on the risk profile and get to a little bit of an understanding of what it might mean for valuation then. The other bucket is related. Accounting and finance go hand in hand. So thinking about the practices for the accounting practices of the business, we usually will have an external consultant that'll help us think through things like revenue recognition or what's counted as debt and what's not. What does the balance sheet look like? What are working capital needs of the business? So those are questions that come up on the accounting side. And then the other, I'd say, large bucket can be legal diligence. So this is specific to the business, certainly. Like, are there any liabilities that we need to think about, but also within the context of the deal? So how do we want to structure the deal? And managing that negotiation is also part of the legal diligence that you'll do. What are you actually buying? Is it certain assets? Is it the interest in the business? And so I think that is another area that you spend a lot of time in. And if you are in a sector like healthcare, there can also be a level of technical or scientific diligence that you do if there's a product that you need to understand. Does it work? Is it competitively differentiated? And so I think that's another category of its own.
Got it. And I know that a lot of this diligence you have to do in a very short period of time. So from when you start a process and then you're doing all this diligence to bid, I don't know, what is like a really fast period and what is like a more like average period of time you have to do all of this diligence?
I think it depends on the type of process that's being run. So if it is formally run by an investment bank where there are multiple private equity firms participating, it can be faster. So you can have maybe 6 weeks to kind of get from start to commitment. So that includes time to progress from one round to the next, to be able to do cursory diligence and then more serious diligence amongst a smaller set of parties. And so I'd say that is pretty fast paced. And then I think there's also another type of deal which can be proprietary, where it's kind of a dialogue with you and the company. There's not a lot of other investors around the opportunity. It's more bilateral. And so that can take, I know some cases that are on our team at TPG where we were building a relationship with the company for years. And we'd kind of check in with them periodically, get access to new data whenever they had updates to share, and use that to refine our thinking of the business and the industry that it's in. And then when it was the right time for management to transact, we were there and we had a pretty good understanding of what the business was like. And it made for a very efficient process at that stage, but it can take years to build that relationship.
Wow, that's really playing the long game. And investing it sounds like it's just never easy. And I'm wondering, when you made that switch from banking to working at TPG, like, were you, as you mentioned, in terms of your answer to why banking, like super energized on the job, or at times were you like overwhelmed as you're making that transition? Like, how was that period? How was it working in investing for you? At the start, and then I know once you got the hang of things, were things better, or was it always just stressful? Like how was it kind of like emotionally for you working in investing?
I think it can be hard when you don't know what to do. I think I had fewer moments like that when I was in investment banking, where the task in front of me was pretty clear. In investing, you are writing that playbook of what is it that we need to answer. Of course, not on your own. You have a quarterback of the process, which is what we refer to for VPs, who kind of channel everything for you. You have the partner on the deal, principal. You have many people who are thinking about the broader process. But I think it's that piece that was a little bit of an adjustment for me, where I was expected a little bit more often to have that perspective on what's next and be able to start to drive things a little bit more rather than just execute on tasks. And I think I'd say that with investing, you have a little bit more control over your time, because again, you are on the principal side of the one kind of making the investment decision. But if you are in a very fast-paced process that is well attended by other firms, it can mean that you have to just kind of keep going and follow the process. And so when you are busy in situations like that, it can often be worse than investment banking in terms of the number of hours that you're putting in, because again, there's skin in the game. And so you're on the hook for anything that you miss in diligence. So I think the stakes are much higher from that perspective compared to an advisory role that you're playing. So I think that pressure can also be something you have to think about. Is it sustainable for you, and kind of making sure you're in the right environment to be able to put your best foot forward.
Yeah. And as you mentioned the hours, people in the comments actually very much want to know, what hours are like, and if you could share generally like average hours. And we didn't talk about it in banking. So like how many hours were you working at Evercore on average? And what was like a really, really good week versus tough week? Hours per week, I guess. And then also in private equity, what could that look like?
Yeah, I'd say they're probably going to sound pretty similar. A good week in banking was really your standard 40-hour week. More typical was around 70 to 80. And then on the high end, it was like 100 plus when you were just really, really busy in a process. And then on the investing side, similar, but just kind of, I think, yeah, I'd say pretty similar. It was one of the things about investing that I enjoyed was if you're not busy, there's not going to be work created for you. You can use your time constructively and you can control how much time you're spending on something, but it's high value add and you can pace yourself as you're working on longer initiatives or kind of building out a thesis or a theme that you're excited to pursue. And then when you're in an active process, that's when you just know work needs to get done and you're prioritizing what work because everything won't get done. So it's all about kind of picking what's material and what's important and doing your best to round out any questions that you have on that side. So I'd say that generally it can be tough when it's busy, but it can also be great when it's not.
And what was we talked a bit about like the unglamorous aspects of banking. And so I'm wondering also for private equity and for growth, because I think a lot of times people from the outside looking in, especially if you're like an undergrad, you're like, I want to do banking and then I want to do work in private equity or want to become an investor. And it sounds like amazing. But what were the aspects of it that people don't really know about the unglamorous sides of being an investor? Like what are those for you?
Yeah, I'd say that having to go through process is always going to feel like one of those things that's less exciting. So that can mean everything you need to do to get your investment committee comfortable, especially in a sector like healthcare, where not everyone has the same baseline understanding of some of the dynamics. And there's a lot of specialized knowledge that you have to educate the rest of the deal team on and rest of investment committee on. So I think that can, the rest of the deal team knows it really well, but you just have to make sure that everyone else is comfortable with it. So that can involve some extra work, process side in terms of kind of liaising with bankers can take time out of your day. When you already have so much on your plate, you have to make sure to trade a diligence request list back and forth and make sure to kind of tick and tie some of those things for all the different stakeholders involved. So I think that is to be expected. It's very important to have people stay organized, especially when there are so many different moving parts. It can just be a lot when you already just have so much on your plate.
And when you are so busy, you sound like you were very busy in undergrad, also in banking and at TPG. And I'm wondering if you have any productivity hacks or tips for people.
Yeah, I think I'm trying to think if I have concrete suggestions. I think being organized in terms of the tasks that you have and assigning relative priority to them has been helpful to me. So I would make sure at the start of a process, and this is something I learned to do after having kind of stumbled and made my own mistakes. But at the beginning of the process, you check in with your VP of here's my understanding of what we need to do and in what order. And then also make sure that they agree with that, because you could spend a lot of time doing something that's actually not that important. And then you have less time for things that you really do need to figure out. So I think it's important to align expectations. And one of the things that has been helpful for me is be more communicative. So even if you don't think you need to tell someone something, they don't have visibility into what you're doing for 10 hours when you're kind of running some data analyses, unless you tell them. So I think that that's something I learned to do, and it helped me be more productive in the sense that I got more guidance on where I should and should not be spending time and how long something should be taking me. So if a task is supposed to take 2 hours based on VP's view, and actually the data is much more unclean and it takes a lot more to process, I think raising that rather than spending 3 times as much and then going back can actually help them realize that, it might be worth spending time elsewhere. So I think that those are just general, I wouldn't say productivity hacks, but general kind of recommendations for how to work on a team that I think have helped us be more efficient. And then I think with regards to your life outside of work, it's helpful to also just have people that you're checking in with regularly during busy times like that, and maintaining a list of things you need to get done to make sure that you're not dropping any balls in that domain.
Yeah. What about are there any apps that you use that are particularly helpful? Like maybe for your calendar or for email, to-do lists? Like, is there anything that is part of like, I don't know, a special sauce of like how I stay productive? Or is it you pretty much use standard apps?
I'd love to hear if there's any that you'd recommend. I have done it in a very rudimentary way of I live by my calendar and my email and maybe a notes doc that I keep going of all the things that I need to do. So it's been pretty basic, but I think it's helpful to have reminders set up for important things that you need to do. And you can schedule them for weeks out, but things that you would forget about otherwise, I think that's been helpful for me. But other than that, it's just been your basic Microsoft suite.
Gotcha. Well, for me, for calendar, I recently started using one called VimCal. And if you've heard of Superhuman for email, it's kind of that, but for calendar, where you can use a lot of shortcuts to create events quickly and then create like Zoom meetings more quickly. But I also use a Mac. And so I think like if you go to the workforce and you're starting to use like Outlook, then maybe you don't need something like this. But for people more who are on the personal side, I found that app to be helpful. I use Spark for my email because I have like 8 different email inboxes or so, and I need all of them to be unified in one. And my Apple calendar was giving a lot of issues, so I just transitioned to Spark. Besides that, honestly, like you can see I have a whiteboard over there. I write down stuff there, and then usually I just stick to my calendar. But I would say I definitely also agree with like aligning with your supervisor and figuring out like the priority of what's most important. That's super helpful, I think, in any career. But yeah, I guess the only other productivity hack I do have is like on my desk, I have an hourglass that's 30 minutes because I had so much trouble focusing. And so I was looking for all these ways. And so this is pretty much like the Pareto thing, I think, where you set a timer. But I think an hourglass just like is not as intrusive. So I flip it for 30 minutes and I just say, I'm going to only work for 30 minutes, not check my phone, not go on anything besides a work task. And then usually I find that beyond the 30 minutes, I'll be working, I'll be focused, I'll be in the groove. So it's like a good reset for me when I feel like I'm not really like focusing super well.
I think changing environments also helps. So if you're not being productive, especially now that we have a little bit more flexibility in terms of going to office or working from home, I find that I would take a break, maybe have a meal, and then sign back online at home and then work through the night. And that little shift helped me break out of a period of unproductivity. So that and learn your shortcuts, Excel shortcuts and email shortcuts can save you a lot of time.
Yeah. Well, we talked a lot about your time in banking and in growth at TPG. And I wanted to ask a little bit about your time at Wharton. And, you are leaving industries that a lot of our classmates are trying to go into. So what made you want to make the decision to come to school?
I think it's definitely helpful to have had the path paved for me. If you look at private equity as an industry, there are a lot of people who've done 2 years of banking, 2 to 3 years as investors, and then go back to business school. So it was helpful to be able to, as I was thinking about the question, have people on my team that I could turn to. Everyone on my team had an MBA that I could turn to and ask as I wanted advice for the process or how I should think about my career more broadly. So that definitely helped. And then as I thought about the value that I would get from going to business school, I think there is something to be said for, again, that moment of lifting your head up and thinking about the bigger picture and thinking about it from the context of your career. So we've just spent 4 years working very hard, kind of getting through day to day and trying to figure out what you're excited by. But I think having the focused opportunity at business school to be able to do that seemed really appealing. And I had identified healthcare as a space that I was excited about and wanted to learn more. So the healthcare management program at Wharton is really great for me to be able to build that domain expertise and start to deepen the knowledge base I had in the industry. Combine that with a chance to build leadership skills. I think until now we're executing. Even when you're an associate at a private equity firm, you are the junior most member on the team. So you've never had to manage someone up until now. So I think when it comes time to taking that next step, if I stay in investing, it's going to be very helpful to have the leadership to be able to think about, or that understanding of leadership principles to be able to apply to my role as a manager when it comes to kind of being able to guide other people and work with them on a team.
Mm. What were the experiences so far that have helped you become a better leader so far during your time at school?
I think that it is a combination of what you learn through interaction with your friends and some of the opportunities that Wharton has created. So we have a lot of leadership programming, like Leadership Ventures, where you take a non-big business context and work with people to solve a challenge or a problem. Like you hike a mountain, or I know a bunch of people who went to Antarctica on the leadership track. So a lot of really interesting environments to try out your leadership style and skills. But then also I think the extracurricular community at Wharton is very vibrant. Mm-hmm. And I've learned a lot from just taking leadership positions in the organizations that I'm passionate about and working with people who have varying levels of interest and involvement, and how do you align everyone to execute on the goals that are important to the organization and that help further the mission that you're all working towards, I think has been a helpful lesson in leadership and management as well.
Yeah, I think motivating MBA students who are so busy and stretched thin and getting them to do work is like a huge leadership lesson in itself. And you kind of touched upon this a little bit, but I wanted to ask, what do you feel like will be your next steps? Maybe like for this upcoming summer or post MBA, do you want to, keep being an investor, but I don't know, work in a different type of investing or industry? Like, what are your thoughts about your future plans?
Yeah, I think healthcare is pretty exciting to me for now. So I'm excited about continuing to learn more about the space and maybe try out different areas that I got less exposure to while I was at TPG to understand some of those dynamics. In terms of what's next, I continue to be very, very excited and energized by this field. I think finance is probably going to be the one where I build my career in. And for me, business school was also about finding the right stage and strategy for me. So I think it's helpful to have had TPG as the first experience I had in the investing world. I really enjoyed it and I learned a lot from my team there. I wanted to compare and contrast that with experiences of my peers and think a little bit more about the aspects of the job I enjoyed and then the ones I enjoyed less to then find the right mix for me in this next stage. So I think it's going to be in investing. It's more about refining what that looks like for me.
Yeah. How do you kind of think about your criteria as you think about your next job in terms of like what you're really looking for?
Yeah, I think when it comes to the opportunity, you want to be able to learn from the team that you're working with. So that continues to be one of the things I prioritize is that learning opportunity. I also think culture is very important, and I've been very lucky so far in the teams that I've had. So it would be great to be able to continue working with a team where you're just building on each other and working really well together. And I think what starts to get more important is the sustainability of the lifestyle and making sure you have that balance. So that's something that's also top of mind. And then I think finally, I mentioned this, but thinking about or alignment with the strategy and the type of investing that they do. There's more opportunistic investing. There's more thematic investing. There's more momentum-driven investing. There's so many different flavors, and each have different implications for how you evaluate investment opportunities, the type of diligence that you do, what your day-to-day looks like. So I think starting to come into my own as an investor, and I mentioned starting to test out that perspective of where do I think the industry is going, what make for good investments, where do I want to put my money if I think about the type of companies that I'd invest in. I think those are all going to be questions that I'm asking in this next stage.
Yeah, makes sense. And important questions to definitely be asking. But it seems like you have like a good set of experiences that you can compare against. And so that when I think probably I would imagine as you're speaking to different firms, you'll have a good gut to kind of go off of. And I wanted to now transition into just kind of like random fun little questions that I had for you. And the first of which is, if you were in an alternate universe, what do you think you'd be doing if it wasn't investing or finance?
Yeah, this is an interesting one. I'd say that two come to mind in terms of alternative paths that I could take. So one is maybe less surprising than the other. I come from an extended family of doctors. So for the longest time, I thought about becoming a healthcare professional rather than going to business school. But I mentioned I discovered that economics class in high school, and that changed the course of the interests that I had and the career I ended up pursuing. So probably a doctor would be another path. And then the other one I think about a lot is a lawyer.
Okay, so. Interesting. But all high achieving, not easy industries to kind of go into. I guess that makes sense. And then what about any kind of really big mentors or influences in your life? Are there any that come to mind for you?
Yeah, I think my parents have been very influential and a great sounding board for me in terms of helping me think through what I'd like from my life and my career, and providing that support to be able to, of course, give me access to all the opportunities I was very fortunate to have, but then also helping me think through what the right considerations are. I'd say beyond that, I'm also very grateful to the mentors I've had at Wharton the first time I was here, and then also opportunities since. So I learned a lot from organizations like SEO, and then another organization like Synergist that are really devoted to diversity in the industry. And I think having that community of like-minded peers who were a very accessible way to ask the questions I was scared to ask my team members, or to understand a little bit more candidly what dynamics in the industry are actually like, were very helpful in getting me to this stage. So I'd really credit them as well, and all the thoughtful work that they're doing to make sure that there's opportunity for members who are from traditionally underrepresented backgrounds.
Yeah. And whenever I think about that, like the people who helped me, I always remember that I could not have gotten to where I am with a ton of other people and their support along the way. So yeah, and I have just one last question for you, which is, if you could go back to your 20-year-old self and you were just giving that person, honestly, more so on the side of personal advice, what would you really kind of tell your younger self?
I think one thing to keep in mind is that conviction is important. It takes time to build that. So it's not always helpful to have it right away. But I think strong opinions loosely held is something that's helpful for me to keep in mind, where you can get a lot of things that will prompt you to consider other career paths, other things you could be doing with your time, an alternative you. But I think having that understanding and taking the time to reflect on what you like and what you don't, and the type of impact you want to have in the world, I think is going to serve you well. So I think that's what I'd encourage people to keep in mind as they're just starting out their careers and thinking about the type of working professional that they want to be.
Yeah, I mean, that's a great tip, because I think, as I think about when I was in undergrad, it was so hard to I was very existential, and I didn't really know what I wanted to do. And having really, really strong opinions about what I want to do and figuring all of that out for me, it took time. But I think like if you can build towards that, that's like super, super helpful and important. But yeah, I know we covered a lot, and I wanted to say thank you again for your time. I'm sure everyone who's watching will also really appreciate all the insights and advice that you gave. So yeah, thanks so much for your time, Akanksha.
Thanks for having me.
All right, so that wraps up this episode. Hope you learned a lot, not just about TPG, but also the growth equity industry overall. And if you'd like to support this channel or break into private equity, be sure to check out the Wharton Wall Street Prep Private Equity Investing Certificate Program. And you can also check out my courses for how to get into investment banking. Sign up early to get that 50% discount, or also check out my How to Get into MBA course at liquidmba.com, and be sure to use my code SUMMER25 to get 25% off of the course. That said, thank you guys all so much for tuning into today's episode. Hope to catch you in the next one. Thanks so much, guys, and peace out.